Welcome back to Stock Tricks with Nick for this week's breakout and breakdown watch list from April 18th to April 22nd. With the market continuing to be in a tough spot, instead of just 10 stocks to watch on the long side, we broke this up. 5 stocks on the long side, 5 stocks on the short side. Today's video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the charts. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list every Sunday morning and make other trading videos. Here are the stocks that we're going to be covering today on both the long and the short sides. I'm not going to spend too much time here because we got a lot of charts to go through. First stock that we'll cover is CrowdStrike, CRWD. This is in computer software security, which is the 49th strongest group in the market right now. So it's a group strength rating of B+, has an accumulation distribution of A-, meaning more of the heavy volume days have come on up days versus down days, which we'll go over here in a second. It's got an overall composite rating of 97 and the relative strength rating of 88. Typically, we look for stocks with relative strength ratings in the 90s, but this I'm making an exception for because we did just break over that 200-day simple moving average with heavier than average volume and are pulling back on light volume. So we'll get into that a little bit more, but fundamentals, earnings per share were up 400%, 267, 125, and then 131 year over year for the last 4 quarters. Sales were up 70, 70, 63, 63, and after-tax profit margins improved by 8%, 8%, 11%, and 16%. We said it was in a relatively strong group, 49th out of 197, but within the group of 41 stocks, it's number 6 on earnings per share rating, number 14 on relative strength, and number 2 overall composite within the group. Fund ownership, we want to see that increasing, and unfortunately from December 2021 to March of 2022, that did drop from 1771 to 1730, so that is one kind of yellow flag on the setup. Going into the chart, what I really like about this is that it had its heaviest volume in 1 year on March 10th, which was an earnings breakout. It gapped above all the key moving averages except for this 200-day simple moving average, did so on heavy volume, and had a pretty nice closing range, 53%. Typically, when you get those big breakouts, you'll actually see some selling into the day, but that held relatively close to close to the middle of the daily range. From there, you can see it pulled back with market pressure. The S&P 500 was pulling back. This also pulled back into the 8, the 21, and the 50-day moving average. That provided support. And then we got a launch pad there, moving up to the 200-day before market pressure brought it back down to the 21. And then even with the market pressure continuing down, this fought through the 200-day, could not close over that on Tuesday. And then the one day that the market pressure lifted and we got a bounce in the market, this shot forward up 7.3%, breaking and closing back over the 200-day simple moving average. First close over that since we dropped below it in November. And then on Thursday, because it was a shortened trading week, we had a very low volume pullback, only down 2%, while the NASDAQ was down over 2%. So good relative strength, pulling back on low volume after a heavy volume breakout over a key moving average. So ideally, if we see more market pressure going into next week, pulling this back into the 200-day simple moving average, the nice round number 230 is an area where I would want to build a position and then use a stop under potentially the previous day's low or Tuesday's low around 221 there for CrowdStrike, CRWD. Next we have FLR, that's in building heavy construction, 45th strongest group out of 197. That's an A- group strength rating, a B+ accumulation distribution, 91 overall composite, and an individual relative strength rating of 97. Fundamentally, not super strong earnings per share, but it did start to turn it around, went from minus 53 to plus 268, plus 64, and then plus 141 year over year. Sales went from minus 21, minus 13, minus 10 to minus 3, so it is worsening, but at a decelerating rate. After-tax profit margin improving by about 1%. Within the group, again, A- group strength rating of 21 stocks. It's number 7 on earnings per share, number 1 on relative strength, and number 4 overall composite. Along with CrowdStrike, this did decline in fund ownership from December to March from 430 to 422. But looking at the chart, we see a nice heavy volume breakout, getting from this $23 area up to 30. And then you can see market pressure, the S&P 500 pulled back in. This also pulled back into the 21 EMA, got supported there, never closed under the 21 EMA. And really tight action, dead volume on Wednesday's trading. You can see this came on very, very light volume. So I actually started a position with a break over Wednesday's high at 29.60. But looking to add to that position, if we open down below 30 and then take out that level again, say there's market pressure on Monday, this opens below 30, closed right on that area on Thursday. But if we open below, then take that out, I want to be building into my position. The next three names are going to be all oil and gas related. That group especially has been setting up very well. We have LPI. This is an oil and gas exploration, 10th out of 197. A+ group strength rating, A accumulation distribution, 97 overall composite, individual relative strength rating, 96. Earnings per share went from -5, -28, -54 to +5, so turning it around there. Sales up 22, 166, 119, and 150, and after-tax profit margins improving 8, 8, 8, and 12. Within the group of 58 stocks, this is only 31st on relative strength at a 96 individual relative strength rating. That just shows you how strong the group is and why we want to be kind of rotating our money into the strongest groups and the strongest stocks. Fund ownership on this has been increasing from, March of 2021, 158 to 342 this March. Looking at the chart, this is a beautiful, beautiful base here. We have a pullback, some resistance right around 100 at 99.26, pullback all the way to 36. That's a little bit deeper of a base than you would like in a perfect world. But since then, we had another rally up to 96 area, and then we start putting in the VCP. So pull back from 96 to 51, jump to 78 to 59, higher low there, up to 88. And then we did get this mini shakeout under the previous low, so really shaking out the weak hands. And then we run up and really start to tighten up above 80 here. So with this, I'm looking for a break over 85 as a potential buy point. It's at 83, 82 right now. It has earnings in 17 days. I should be well into a position if the stock starts to act the way I expect before then. But look at this tightening in this type of pattern in the strongest group in the market, or one of the strongest groups in the market, and a strong stock in that group. So break over 85 for LPI. Next, we have OKE. This is the 20th strongest group out of 197. Same type of industry, but the group is a little bit more individual than that. So A group strength rating, C- accumulation distribution. That's really the one thing holding this setup back, but we'll go through everything else that shows its strength. It's got a 97 composite rating, 92 individual relative strength. Earnings per share were up 12, 141, 26, 23%. Sales up 50, 109, 104, 109, 111. After-tax profit margins improving right around 10% each of the last 4 quarters. Within the group of 55 stocks, again, this is 24th out of 55. Not the strongest stock, but one of the better setups where you can manage risk within the group. Fund ownership on this did decline from December to March of 2022, but was in a steady uptrend from there. So with this, we did have this nice base, broke out, shook back to the 50-day moving average, and then really extended from 62 to 72. And then look at this tight action as the 21-day EMA catches up, as the 8-day flattens out. We found support a little bit under 70 at 69.70 area, and then put in an inside candle on Thursday, closed flat on the day while the market really took a beating. So looking for a break over Thursday's high, 71.84 as a potential buy point. And last stock that we'll cover on the long side is OXY. This is an oil and gas exploration, 4th strongest group out of 197. A+ group strength rating, A+ accumulation distribution, 99 overall composite, 99 individual relative strength. Earnings turned it around to plus 117, plus 202, plus 328% earnings per share growth. Sales went from minus 18 to plus 102, plus 108, plus 140. After-tax profit margins also exploding higher, 1%, 8%, 15%, 20% improvements there. Within the group of 15 stocks, it's number 1 on relative strength, number 2 on accumulation distribution, number 1 on overall composite rating. And this has seen fund ownership increase from 1208 to 1409 this March. Looking at the chart, we had a breakout from this 2605 area all the way up to 63, so really nice breakout there. Pull back to the 21 EMA, supported, kind of bounced a little bit, pulled back again, supported, never closed under the 21 EMA. Buyers always stepped in. We got a nice extension, I think that was last Thursday, or the previous Thursday, excuse me, and then many inside candles from that one kind of extension here. Really tight action on Thursday with low volume, the lowest volume since this pullback. Inside candle, attempted to move over 60, but with the market pressure really pulling down, it couldn't get going. So if market pressure lifts, looking at that $60 area to really build out a position. I do have a small position in this right now, but looking for an even larger one as it works its way through 60. Now onto the short side. First stock that we have is Bumble, BMBL. This is an internet content, 155 out of 197. That's a D group strength rating. It's got a B accumulation distribution, 30 overall composite rating, and an individual relative strength rating of 13. So the opposite is true when we're shorting. We want to see weak stocks in weak groups with weak accumulation distribution versus strong stocks, strong groups on setups that we want to take long. So within the group of 76 stocks, it's number 34th on relative strength, so kind of in the middle there. 15th on accumulation distribution, just because it did have this high volume breakout after earnings. And then overall composite rating, 25th out of 76. Fund ownership has been steady around 360 from September to March, 360, 350, 360 in March of 2022. Earnings per share still negative, improving a little bit, but still negative. Sales are up 43, 38, 24, and 26. So they're still increasing, but at a decelerating rate. And after-tax profit margins still negative each of the last 4 quarters. Looking at this, I want to go into a 60-minute chart here because you can see when we got that high volume breakout, market pressure pulled it back in, and then we exploded higher, right? And then there was this area right at 30 that it was building a pivot, and I had tried to trade this on the long side a couple times, but each time it quickly proved me wrong, got stopped out very quickly on many of these setups. And then so that was the resistance then. Support on the other side was at this $27 area. Every time it pulled back into 27 or 27.50, it found support, and then eventually we gapped down under that area. And then you can see after we closed under 27, now that has become the resistance. So support turned resistance after we closed under it. From there, it did kind of take a turn down along with the market on Thursday. So if we open up, say the market opens up and this starts edging towards 27 and then the market makes the U-turn, that's when I'm going to be looking to start a short position against 27.50, just to give it a little bit more wiggle room on the upside so I don't get stopped out immediately. Or if the market falls apart, you can see a break under 25. That could be a nice clean area to start a short position. Next we have CFLT. This is in computer software databases, 154th strongest group out of 197. D plus group strength rating, D accumulation distribution, 12 overall composite rating, and an individual relative strength rating of only 20. Within the group of 26 stocks, this is 19th on relative strength and 24th overall composite. Fund ownership has started to steady out at 279, then 280 the last 2 quarters. And you can see we did bounce from 28 to 44 while the market bounced off the low, but as many stocks reclaimed all their key moving averages, this stock never even got back over its 50-day. You can see it's well under the 200-day moving average as well. Similar to NEO that we'll cover in a second here, this has a nice round number of 40 to work with as we're managing our risk on the upside if the stock actually breaks to the upside. So we're looking to start a position around this $40 area, or if we break under the low on Thursday, 38.44, and use that $40 area as a stop loss. We have the 8 and the 21 and a nice round number, all pressing down for potential resistance at that area. So if it does break over 40, over the 8, over the 21 EMA, we just have to admit we're wrong on the setup and get out for a small loss for CFLT. Next, we have the car manufacturer, NIO, N-I-O. That's 93rd strongest group out of 197. B minus group strength rating, B minus accumulation distribution, 27 composite rating, and an individual relative strength rating of 11. Earnings have been negative, so nothing to say there. Sales are increasing, but at a decelerating rate from 529, 149, 128 to 53. After-tax profit margins getting worse at an accelerating rate, so -4, -4, -6, -17. Within the group of 33 stocks, this is 22nd on relative strength and 14th overall composite. Fund ownership has started to decline, so you typically see price decline well before fund ownership starts to roll over, but we went from 989 in December of 2021 to 949 in March. Going to a weekly chart really quick, this topped out around 60 and really started pulling back. Now it's at 20, so a 66% decline from the top. So why are we looking to short it? Because it's still weak. It's still under all the key moving averages, while many names are back above at least the 8, the 21 area. It's a tech name. Tech is performing weaker than the S&P 500. The general market itself is in a downtrend, and we have a nice area to work with $20 as a potential stop loss area. You'd see the 8, the 21, and the 50-day moving average all around the same price. So if we start a position around 20 and then use the 50-day at $21 as a stop loss, that's 5%. Or if we open down and we start a position a little bit lower, say 1950, 1925 or so, we'd use 20 and then some change as a stop loss, just a nice round number, and the 8 and 21 EMAs as potential resistance on the upside for NEO. Got two more short setups for you. Roblox is the next one. It's in computer software gaming, 159th out of 197 group strength. That's D group strength, C plus accumulation distribution, 14th composite, and an individual relative strength rating of just 9. Within 22 stocks in the group, it's 17th on relative strength and number 15 overall composite. And fund ownership is declining from 636 to 596 in March. Earnings turned around the opposite way, went from 144 plus 300 to minus 80, then back to negative. Sales went from 140, 127, 102, 83. So although they're increasing, they're doing so at a decelerating rate. You see after tax profit margins were improving, but at a decelerating rate, and then actually turned around to negative 25% in December of 2021. With this, you can see it's under all the key moving averages. You have the 200, the 50, the 21, and the 8-day EMAs, all above, providing selling resistance up top. This did not rally back above the 21 or the 8 as the market bounced on Wednesday. So that was a sign of weakness. We closed at the low of the day, down 5%. If we get a market bounce on Monday back into the 21 EMA or the 8-day EMA, that's about 8% from here at $46 or $44.50 for the 8-day EMA. That could be a position to start your stop or start your short position and then use the 21, the 46.50 area as a stop loss for Roblox. Last stock we'll cover is Upstart. It's in finance, consumer loans, 137 out of 197, C plus or C minus group strength, C accumulation distribution, 43 overall composite, and relative strength rating of only 14. Within the group of 27 stocks, it's number 27 or 21 on relative strength and number 14 overall composite. You can see fund ownership is starting to decelerate. When really took off, was a great trade in 2021, but has been a great short in 2022. Went from 53 all the way up to 620, but we're starting to see a decelerating rate of fund ownership increasing. Does have really strong fundamentals, so probably not a stock that I want to be shorting for the next 3 months or anything like that. But this has been showing really good relative weakness on the short side for us, where it broke under 100, never even tested that area, put in an inside candle on Wednesday when the market bounced, but did so on lower volume than all the selling days, and then closed at the low of the day, down 6% on Thursday on a little bit heavier volume than the previous day. We're looking for a break, potential scenarios. If the market bounces on Monday, we come back up to the 8-day EMA, that's at 91.54. Then we could start a position against, Tuesday's high, which was 95.36. That would keep very, very tight stop loss. That's probably how I would want to play this instead of just a complete dump through 80, testing the previous lows at 75. I would like to see this kind of bounce into an 8-day EMA, allow that 21 EMA to catch up on the downside a little bit more so we can manage our risk better. But this is a stock that's been showing a ton of weakness. So if it presents itself with a low volume bounce, kind of like what happened on Wednesday, we want to come in with a short position. And that's going to be the breakout and breakdown watch list of the week. If you guys enjoyed the video, please leave a like and subscribe to my channel. Big thanks to MarketSmith for sponsoring the video. If you guys enjoyed MarketSmith, there's a link in the description below so you guys can try it out yourself. I hope you all have a happy Easter, and I'll see you guys in the next video.